So, guys,
Hello,
good afternoon.
good
How
afternoon.
are you guys doing? I hope you guys had a very beautiful day. Today, we are going to be talking
Hello.
about market forecast, both our weekly and daily and monthly forecast, majorly weekly and monthly forecast. So, now, first, I want to say this. I've said it before in our previous class that at the beginning of every new week, you should make sure you go to the weekly time frame. As for me, I do used to go to the weekly time frame at the beginning of the week, at the middle of the week, and also at the end of the week. So the same thing for monthly. At the beginning of every month, you should go to the monthly time frame, and towards the middle, you can also go to the monthly time frame if you want, and also at the end of the month. So at the end of the month, when you are making your weekly forecast, you try to go to the monthly in order to see how did this month end, what happened this month. So same thing for the beginning of every month, you go to the monthly time frame to look at what happened the previous month and how is this month starting, what is likely to happen at the beginning of the month. I hope we are following. So um, now, weekly and monthly market forecast criteria. Now, in order to do your weekly or monthly market forecast, including daily too, the first thing you should look for is your structure. You should make sure that you look for your structure. Then the second thing to map out is your liquidity zone. Where is the money sitting? The third thing there is imbalance. So let's say at the beginning of the week, you want to do your weekly forecast. You first map out your structure. You then look for where there's liquidity. You know that liquidity are like magnets. So you look for where there's liquidity. The next thing is what? You look for other blocks or key levels, and then you check your economic calendar. That's your fundamentals. At the beginning of every week, as a trader, you're supposed to, when you're making your weekly forecast, you check your fundamental. Okay, on Tuesday there is high impact news on USD, on Friday there is NFP, on Thursday there is this. You understand? So with that, every day or that particular day, you know that okay, if you make your analysis and you see that your analysis is going a different direction and the news might go a different direction, that will ring in your head for you to put break even. So when it's almost 2 o'clock and you know that this news might go against me, you just take your stop loss to break even in case. You understand? So just have that at the back of your mind that first is structure, then second is liquidity, third is imbalance. Imbalance is not just fair value gaps. Then fourth is your key levels, another block, and then you look for you check for your fundamentals. So now let's talk about structure and candle close. Now this is weekly time frame. This is weekly time frame. Now let's say I want to analyze this price now. The first thing to do is what? I go to my weekly time frame. I mark my structure. Now the second thing there is to look for liquidity, your internal range and external range liquidity. You look for liquidity, and then next you mark your supply and demand zone or your key levels. So when we are talking about candle close. Now let's say for example this week candle close like this with the full body, or let's say this last week. Now this week also close like this. This week also close like this, closing above the previous week. Now what are you going to be expecting next week? Let's say you go to weekly now, you have mapped out your structure and everything. What you are going to be expecting now is this place here, from this week up to this place, is a fair value gap. That is an imbalance. Now you know that there is possibility that price will come down a bit to fill this gap, even if price didn't fill the gap up to 50%, sometimes 50%, then you see as if price is not reacting to anything, price will just reverse. Now I can now say that for next week I'm expecting the market to open at this place, come down a bit, and then buy. Now if I now go to my let's say this is weekly, if I now go to my daily or 4 hours, I'll now start looking for the key levels there. I'll first mark my key levels from the daily time frame, and then I'll now start looking for any demand zone there that price will react to and start buying. So, but what if this candle now close below? Let's say this is last week. This is last week. This week opened here and closed like this. This week now swept the previous week high, then closed below it. Now there's possibility next week that since this high have been swept, price can likely come down and sweep the low too before going up. So I'm going to show you example in the chart. Okay, now I said this is last week. This candle is last week, and this week that just ended is this second candle, closing above the previous candle. Now you can see that from this week here like this up to this place, there's a fair value gap there. Now there's possibility that since this candle closed above this one, both body and wick, now there's possibility that next week, when the next candle opens from here next week, it will come down to fill this gap a bit before going up. So you now go down to your daily time frame, you look for a key level around within this candle or even below it. Then you go to your 4-hour time frame to look for a level where you can start buying from next week. But if eventually, let's say this week candle close below like this, below that previous week, and then sweep the previous week high with a wick like this, look, sweep the previous week high like this. Now there's possibility that if the next week opens from here, it's going to come down and take out this low too.
Okay, because it didn't close above it.
Yes, this a weekly time frame. If you look at these candles now, look from this place here, this place, you can see that the price closed bullish. The second week closed above it bullish, but look at what happened. The next week closed below it. This next week, this bearish candle, you see that it closed below it. After it swept the high, it went down and swept the low too. You see that liquidity have been swept. Now if I want to take a buy from here, after the high have been swept, I know that the low is also going to be swept. Once the low is swept, then I now know that okay, the liquidity have been taken out. The next thing I'll be looking for is key level, but I'm going to come to that. But I just want you to know about the candle closure, that if the candle close, or if this week close above the next week, there's still possibility that price will make a little retracement to continue buying. But if you see price close above and it's still reacting to a key level, then you know that from next week there's possibility that price will dump. For example, let's say on a weekly time frame, there's a weekly order block here like this, and you see price coming to that zone like this. It doesn't mean because you see price price close above the previous week, that doesn't mean that it's not going to drop. Since price is rejecting from a higher time frame supply, then you know that there's possibility next week that price will do what? Retest back at that place and start dumping. So but for now, let's just finish candle closure, then the candle close, sorry, then we'll talk about liquidity. So is there any question,
No question. Understood.
or should I explain again?
No, I'm good. I understand.
Okay, so now the next thing here is liquidity, external range liquidity and internal range liquidity. You know that in structure, when you see price making higher high, higher low, higher high, higher low. Now price is not just making higher high and higher low. Price is actually taking out the internal range liquidity and the external range liquidity. Now price is bullish like this. This place is your external range liquidity. This place is your external range liquidity. Everything you have within this place is internal range. So most of the time, all those little structure you see here, you see price will come and sweep them first before going. Those are all your internal range liquidity. Now, if you see price retrace like this, price is coming down to take out all this internal range liquidity. Then you now have another what? Break of structure. After this external range liquidity have been taken out, here, this one now, external range liquidity have been taken out, you now have a break of structure.
Mm-hmm.
Where price is going to next is where? Internal range liquidity.
Okay, I have a question here. Sorry for cutting you.
Yes.
So now, for instance, what if we didn't break this external range liquidity? After reaching that zone, it started retracing back down, like
Yes.
started to fall back. Now, that's like a sign that the market is not going to buy at that moment again, right?
Yes. Now to
Like
confirm
it falls
that, I can hear you.
like it didn't break this top, this external range, this high here. Then instead, it started retracing down and broke this low, the low that I created before getting to that high.
Okay, like this now. Price didn't take out this high.
Yes,
Price now came
then
down and took out this low.
yes.
Now, I hope you know that this chart you see, this chart you see
Mm.
is, should I use a copy of what is happening in the market? So if price
Yes.
didn't take out this high, price came back to take out this low, then it's just the market doing its thing. But just know that every time you see market doing something, there is a reason behind it. So there is sometimes that you'll be waiting for price to come to your supply like this, your order block, but you see the market to come close to it and then reverse. There's still a reason behind it. So if, as a trader, you need to be flexible. If the market is turning like this, you go with it. If the market is going like this, you go with it. When you are confused, you stay away from the market.
Yeah.
So it's very possible that you'll be expecting price to come and take out this external range liquidity before making a retracement. Price will not take out the external range. Price will come back and sweep all this low. Those low are still what? They are still liquidity. All these low are also
Yes.
external range. I hope you know. So
Yes.
price might come down to take out all this low. Now most of the time you see if let's say price made something like this, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Now I hope you know that within this place now there's trend line liquidity. This, all this low here, there's trend line
Yes.
liquidity here. So some of the time where you see that price is not creating a high again, it just made a little swing high, it didn't take out the previous high and it's coming back, it's still what? It's still liquidity that is coming, is still coming back to. So liquidity are like magnets. I hope you understand.
Understood.
So when you are doing your market forecast at the beginning of every week, you first look out for structure, and secondly, you look out for liquidity zone. Where do you think that price will come to? Let me use gold as an example. Okay, now gold on a weekly time frame doesn't have much structure like this, like that. Let's say now, want to do our weekly analysis, want to know, okay, next week where will the market be going to possibly. Now this is the only place where I saw a break, and then this bearish candle is our previous week. Where is our previous week rejecting from or reacting from? These last 2 weeks it closed bullish. Now you see that this week didn't close above the previous week, it closed below it. Now the next thing I'm going to be looking for is what really happened. Now if you look here, there is a key level here. Look, there's a key level here, not just a key level. You see this week.
Yes.
Look at this week here. This week here was used as liquidity for last week. Price swept it, tapped into this key level, and then closed bearish. Now the next thing I will then do is I will now go to my daily time frame and see what is happening on the daily time frame. Look at the structure of everywhere on the daily time frame. Now what am I going to be expecting? Below all these lows, there are liquidity. All these lows, you see that there's liquidity here. Now there's still possibility that if you look at this structure on a 4-hour time frame, this is a break of structure here like this. We have a break of structure here. If you go to 4-hour, look, there's a break of structure here, right, showing that price is bullish. But now below all this place there's liquidity. What am I expecting? Now there is high possibility that price will come down to sweep all this low first before what? Buying. I hope you see. So
And there's a fair value gap around that side.
yes, and there's a fair value gap there. Now when we are talking about imbalance is not just fair value gap. You know this jump that normally happen on Sunday night, mostly at the open of the market.
Yes.
That is also an imbalance in the market. I think the same thing happened this week. Let me look for one example. Now most of the time, last week closed bullish here. You wake up in the morning on Monday morning and you see that the market opened from up here. Now this gap you see here, this is also an imbalance. Most of the time you see that the market will go up, for example, and then come back here to fill this place before the market will continue. Also, another thing you should know is even retracement. There are times that you see as if the market has overbought or oversold. Those ones are also imbalanced in the market. Let's say you see structure like this. Price gave you a break of structure here. Now you're expecting price after this break to make a retracement like this, but rather price just keep buying. This is overbought, and it's also an imbalance because you just see that one day unexpectedly price will just start dumping, trying to balance the price again before it will start buying. So the number one thing to look out for when you want to make your market outlook is structure. After you look for structure, the second thing to look for is liquidity. After you look for liquidity, the third thing to look for are your key levels or your supply and demand or other block. Where is price coming from? Where is price going to? Where will price be reacting from? or where is price reacting from? You see, like this gold trade now, if I didn't look at that key level, I might be saying that okay, maybe price just decided to close bearish. But you see that liquidity have been swept here. Liquidity have been swept. Price is reacting from a key level here. And if you go to 4-hour time frame, you see that price is already selling on a 4-hour time frame. Look at what happened here. Or let me use 1 hour. Look, in 1 hour now, after price tapped into that level last week, on a 1 hour, we have a break of structure here. All these plays are liquidity. You see that price came back, swept liquidity, and tapped into this other block here. Tapped into this other block, and it's now selling. It's now selling. Where are you going to be targeting? The closest liquidity zone or the closest key level or other block. You target DFS. When price hits that place, you take your partial profit, then you extend it to the next liquidity level. Like that, like that, like that. Since this is a counter trend, if this is a pro trend, then you'll be targeting high upon high. You understand?
Yes.
So let's do another example. Let's use GBP USD. Okay, we start from, okay, let's just assume that this is the end of the month or this is a new month. So we are going to start from the monthly time frame. Let me clear everything. Use Oranda. Okay. Now this a monthly time frame. Now what happened in October or starting from September? Price came up from down here to this place. Now where is price reacting from? There is a level here. This level, this breaker block. Let me mark the breaker block. Price is rejecting from this breaker block here. And then what happened? That is in June. Then July, price closed bearish. Now you see that this price that closed bearish now is our first sign that okay, price might be reversing from here. Now in August, price came back. After price swept the low, price came back. Now what are we expecting? Either price sweep this high, that's the next month. Either price sweep this high or price will react to it and start selling. Now let's go to our weekly time frame. Look at this key level here. You see that price came back, swept all this liquidity, tapped into this zone and started selling. Already we are expecting sell. Why are we expecting sell? Because of price is coming from a higher time frame level. Price is reacting from a higher time frame level. And then we saw that the next month closed below this one. And then if you look at the structure from daily time frame, we already have a break here. Look at this, a break of structure. This is a break of structure. I didn't come down to the daily time frame, but I know that there's a break there because of that is a monthly time frame. That one monthly candle like that has 30 days or 31 days in it. So now let me go back to weekly. This last week closed bullish. The last 2 weeks closed bullish. Now I'm expecting sales right from the market. This is a break of structure here on a weekly time frame, and price is just retracing. Now I'm expecting sales. What am I going to do? What am I going to do next? I'll mark my key level. This place is still fresh. This place is still fresh. Now this bearish candle, the low here, have been taken out. this low have been taken out. Now there's possibility that what the high is going to be taken out, right? So I'll now go down to my daily time frame and then mark my daily structure too. On the daily time frame, we have a break here, making this place our daily strong high. There is a fair value gap here. There's a fair value gap here. There's another fair value gap here. Now these fair value gaps are also liquidity for the market. Now what am I expecting? I'm expecting price to sweep this high, come up to this key level. Then if I see a confirmation for next week, I'll start what? Selling. Why am I selling? Because price is bearish. I hope you understand.
Yes.
Now if I'm selling from here, I'm going to be targeting this low for price to give us another break of structure. You remember what I explained earlier? This is an external range liquidity. Price have taken out the external range liquidity. All these ones here, including this fair value gap, are all internal range liquidity. Now I'm expecting price to sweep all of them. Price have filled this gap. I'm expecting price to take out this high. Now tap into this key level, or you can call it your supply. Tap into this supply and then give me a confirmation to start selling. Now if price starts selling, it's going to take out all this internal range. All these places are going to be internal range liquidity. It will take out all these ones and then give us another break of structure. After the break of structure, the same thing, we are going to be looking for another key level where price will react to. You start buying with price. So that is just it. Is there any question?
Nope, no question.
See the zone where we are expecting to sell from. I've even forgotten which chart did we use. So let's do one more example on AUD USD.
Okay.
So we start from the weekly time frame. We had a break here, another break here, and this one. And then next thing we are going to look out for is where is price reacting from. You see this whole buy from here. Price is reacting from this breaker block here, this key level here. Price is reacting from this zone here, and then price started selling. And this week, last week, sorry, made a retracement to this zone. This is a key level. All these places now have been swept. All this liquidity have been swept. Now, what are we going to be expecting this week? Let's go down to daily time frame. On our daily time frame, price have come back to the extreme. All this liquidity have been swept, and then this imbalance here too have been filled. There's an imbalance here. It has been filled already. Now, what I'm expecting from this zone now on AUD USD is this. I want to see a change of character here, and then I'll start selling. I think I'm already even selling. I'm already selling because there's a break, a body break here. You go to 1 hour, you see it's more clear. There's a break already here. I hope you see. Look at it. This is a break. Now price made a retracement back to this zone. I'm expecting sales from here. I think I'm already selling AUD USD. I'm already selling. Selling AUD USD already. So that is just it. So you mark your structure, you look for where liquidity have been taken out and where liquidity have not been taken out. Like this place now, all this liquidity have been taken out here, but there is still liquidity below all these zones. So you know that price will come back to that zone probably. And then the next thing that gave me more confidence to start selling is because price is already reacting from a key level or rejecting from a key level. And now go down to my 4 hour, I saw confirmation. Then you look at your structure, you have your break of structure already. Look here, there's a break of structure already here, making this low a strong 4 hour zone. So even if price might not come down or price don't want to come down, I know that I'm going to be expecting a retracement from here, right, to balance price. So at least I can sell from here down to any of this place before price will continue buying. You see that I'm still on a safer side. So that is just it.